3 months ago, my realtor friend walked away from a deal that would have made her $87,000 in commission. She told her client to walk away too. One single red flag made her kill the deal, and today I'm going to tell you exactly what it was, plus the 4 critical factors I look for in every real estate transaction in 2025's market. Stay with me because number 3 is something almost nobody's talking about right now, and it's making or breaking portfolios across the Bay Area. If you're new here, welcome to Survive the Crash. I'm Ramin, a mortgage strategist obsessed with data who also knows behind every property is a human story. We all know the market's been chaos. Interest rates flirting with 7%, tech layoffs, shaking up San Jose and Sunnyvale, investors from both coasts fighting over the last few cash flowing deals. But here's the truth. There are still incredible opportunities if you know exactly what to look for. So let's get into it. The first thing I look for isn't the property. It's what I call the location resilience score. This isn't just good neighborhood stuff. It's a framework I use to score how well a location holds value when things get volatile. 4 things go into it: employment diversity, infrastructure investment, supply constraints, how the area performed during the past downturns. Example, I had a client looking at a duplex in San Jose. It looked amazing on paper, but my location resilience score gave it a 6.2 out of 10. That's below my minimum. Heavy tech refinance, no future investment plans, and got hit hard in the '08 crash. We pivoted her to a more expensive duplex in Oakland. It scored an 8.4. More job variety, $50 million in infrastructure upgrades, strict zoning laws. Fast forward, the Oakland place appreciated 4% in a down market and now was a waiting list for tenants. She paid more up front, but made way more over time. That's the kind of decision this score will help you make. The second thing I look for is called the Adaptability Quotient, or AQ. In a volatile market, properties that adapt to change are worth their weight in gold. I'm talking multi-use potential, flooring plans that flex, and zoning that lets you do more, like ADUs or lot splits under SB 9. Last year, I helped a client buy a 1950s ranch in Sunnyvale with an AQ of 9.2. Perfect rectangular lot, already zoned for an ADU. Floor plan could be reconfigured easily. 6 months later, we built an ADU that now rents for $2,400 a month. That's a 30% return on her build cost and about $180,000 added to the property value. In February, when the layoffs hit Sunnyvale, she kept cash flow steady thanks to lease flexibility. That's what AQ gives you: options, protection, upside. Third, future-proof fundamentals. This is the one no one talks about. Climate, technology, infrastructure, these all hit real estate harder now than ever before. My checklist looks at 3 things: climate risk like floods, fires and water security, energy readiness like solar, EV chargers, battery systems, digital infrastructure like fiber, internet, smart tech, and 5G. I had a client ready to buy a luxury condo in downtown San Jose, but the building had no EV infrastructure, no plans to add it, bad cell signals, and no fiber, so we passed. Instead, we found an older building nearby, recently retrofitted. EV ready, smart upgrades, climate resilience plan. That building rents for $275 more and has stronger resale potential. You want something that looks 5 years ahead, not just backwards. Number 4, stress test survival. If a deal looks good at today's rates and rents, that's not enough. I want to know, what if rates go up 2%? What if rents drop 15%? What if it sits vacant for 2 months? A 4-plex in Fremont looked really promising at $2.2 million. $14K in rent, $570 monthly cash flow, but under those stress tests, it tanked, negative cash flow. We passed and found a similar one for $2.4 million. Much better rent, much better tenants, $2,200 monthly cash flow today, and it still cash flows in the worst case scenarios. That's the difference between an investment and a future lawsuit. Now let's talk about the one red flag that kills any deal instantly: deferred maintenance and water intrusion. That's a killer combo, like cancer in real estate. By the time you see the damage, well, it's already too late. That $3.2 million 6-plex in Oakland I mentioned earlier, it looked amazing, until my realtor friend saw signs of water staining in the ceiling. Then did a deeper inspection. Turns out there was mold inside the walls, structural rot, water had been seeping in for years. Repair cost over $790,000. Deal killed. Another investor didn't listen, bought a similar place in San Jose with water issues. 8 months later, $600,000 in repairs. 2 lawsuits from tenants over mold. I don't care how good the numbers look. If I see both deferred maintenance and water, I'm out. Now, here's the mindset shift. Stop buying like a consumer. Start buying like a problem solver. Consumers ask, do I like this place? Investors ask, what problem does this property solve in the market? 3-bed rentals with EV charger shortage? Small homes with ADU potential near good schools? High demand. If your property solves a real market problem, you got pricing power, you got stability, and you also get leverage. So let's recap the 4 things I look for in 2025. Location resilience score, adaptability quotient, future-proof fundamentals, and stress test survival. And the one red flag that kills any deal, deferred maintenance plus water intrusion. Now, I created a free checklist that walks you through this entire playbook. Click the link in the description and download it. And next week, I'm going to share the most profitable real estate strategy that nobody's talking about. It's earning 22 to 30% returns. Even in this market, you don't want to miss it. I'm Ramin, stay data-driven, and remember, in real estate, emotion is expensive.